Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equities are likely to have a bit of consolidation mode or a negative start coming in on the final session of the week. GIFT Nifty signals again a negative start coming in for the Wall Street after 6 consecutive sessions of hitting that record high level. Broad sell-off seen in the US markets as the hot jobs data raises fears of Fed rate hikes coming in. S&P 500 and Nasdaq, meanwhile, are on pace for weekly losses of around 0.9% and 0.8% respectively. Asian markets detail US market losses and trading lower in morning. Let's talk about the highest delivery percentage that's been seen in HDFC, JK Cement, India Mart, Intermesh, Torrent Pharma and Hindustan Unilever. FIIs, they continue to pour in, while they've bought shares worth around 2,641 crore and DIIs too. On that side, contrary, have sold shares to an extent of 2,350 odd crore. FNOQs out there, 80 stocks which have seen long build up: Aurobindo Pharma, Delta Corp, Gale India, M&M, and PVR Inox. 25 of them have seen long unwinding, and that include the likes of JSPL, HDFC AMC, Marico, IDFC, and Canfin Homes. Almost 26 of them have seen short build ups, and that include the like of Eicher Motors, Tata Consumer Products, Aarti Industries, India Bull Housing Finance, and HCL. Let's talk about short covering. Almost 58 of them have seen short covering, and that includes the like of HDFC, Hero MotoCorp, Coal India, and Bandhan Bank. Can't get more into Delta Corp. Stocks under F&O ban on NSE includes BHEL and Delta Corp for July 7th. Also, let us go going and discuss some stocks and strategies with Thakkar, Head Alternate Research Capital Market Strategy at Sharekhan by BNP. Good morning there.
Hi, very good morning to you, Nickey.
I'm going to start off by asking you about what's your assessment for the markets. Do you see a bit of a pause coming in for Indian equity markets after hitting record high levels for the last 6 consecutive sessions? Your assessment and what is the trade setup looking like?
Well, see, Nickey, we have seen a good move coming in Nifty lately. We had seen a larger breakout coming earlier on a Bank Nifty a few months ago. Thereafter, we saw Bank Nifty and then performing, Nifty performing. So, both of these indices, the benchmark indices, I would say, there was always lead and lag out there. But there is one index which kept moving higher, and that was Nifty Midcap Index. Breaking out of all-time highs, consolidation of 2 years, and then Nifty Midcap Index, when it provided a breakout ultimately about 32,500, 33,000, it never looked back. It just kept moving up. And yesterday too, I believe that it closed somewhere near the day's high, or life high, I would say. So that clearly sets the tone on a longer-term charts that there has been a long-term breakout. First of all, on the Midcap Index. Then followed, so it was earlier on a Bank Nifty which moved sideways, then after Midcap Index, and then lately at the last came a final breakout, I would say, on Nifty, wherein there were a lot of several memes as well circulated in the markets, as in it missed the lifetime highs by a few points and many of times, right? But then finally when it made a lifetime high, it never looked back, and as you rightly said, for 6-7 days consecutively it went up, and there we go. 19,500 almost is where the levels we saw yesterday. So with all of this, what I mean to say is that the long-term breakouts have happened, right? Of course, in the short term, things look a little bit overbought. Look at the derivatives data. The PCR had hit in the last weekly series. The PCR had hit almost 1.5, 1.6 level, which are nearly too overbought. Not too overbought, but nearly too overbought. Second most important data, Nickey, which I want to share for the short term is the FI net long positions in the market. That has reached to 73%. Generally, between 75, 78, maybe 80, you see that eking out. Okay, like in March, when Nifty had hit low of around 16,800. There was a lot of shorting that point of time. The net percentage long of FI was 7.75%, as low as that. Right? So It was 7.75%. Generally, it is around
Sure. Jay, sorry to interrupt you there. I just wanted to understand your 30 seconds on Nifty and Bank Nifty strategy along with the levels, because I want to graduate to stocks and news and Reliance Industry next in discussion with you.
So I would say that 19,400, 19,300 on an immediate basis are the support levels for Nifty, and the targets would be 19,800 going forward. And as far as Bank Nifty is concerned, the targets on the upside will be 45,800 to 46,000. The support is in the near term is in the range of 44,800 to 45,000.
Sure. I also wanted to chat about Reliance Industries. Too much of news around that counter. It's hit that 7-month high. Buy, sell, hold. NCLT has approved the demerger of financial services unit of Reliance Industries. I'm sure most of the investor community is already aware of that. The company is going to be fixing in the record date for listing Reliance Strategic. That's overall the news flow. There are a couple of brokerages around it, but the stock is currently at the 7-month high. Buy, hold, sell. What's your perspective and the levels, please?
Depends on which time frame one is trading, Nickey. So for the short-term traders, it would be a sell. By sell, I would say book profits. At these levels, it has reached to a downtrend line resistance. For a medium to long-term trader, it would be a buy or maybe a hold. Okay, the support levels for the medium-term traders would be 2,500 now, and for a long-term trader, it would be 2,400. And for the medium-term trader, the targets will be 2,750. Whereas for the long-term traders, definitely lifetime highs. But someone who's looking for a very short term, it has reached to somewhat overbought territory, so one can book profits out there.
All right, Jay, we're just going to touch base with you again. Let's quickly address the stocks and news before the markets open, just to understand where the momentum is. But before that, I'd want to talk about IdeaForge technology. New kid on the block is going to be listed, and the issue price is set at around 672 per share. All eyes will be on IdeaForge. If one goes by the signals from grey market, the company could deliver a stellar listing pop on its maiden trading session. Well, the company has been, or let's just say was commanding a premium of around 510.20 per share in the grain market, which is around 75 to 80% higher from the issue price at around 672. According to the market analyst, investors are highly confident in the company's business model, fundamentals leading to the strong premium overall in the grey markets. Overall, also 567 crore IPO of the company became the first IPO after 2021 to get bids for more than 100 times. That's a record high level. Let's address some strong Q1 updates by SOBA. 28% uptick growth in the overall Q1 total sales. Price realization surged 25%. Titan company, no different trend playing out there. The revenue is grown by 20%. Jewelry division is up by 21%. And all key consumer business exhibiting double-digit growth. Let's talk about the store addition. Overall, 68 stores have been added and the retail presence is magnified with that. Now, with the Titan numbers are strong numbers by the industry leaders. Don't forget that there was a massive volatility in gold prices during the quarter. Let's also talk about Dabur India. Now, Q1 consolidated business to register growth over 10% year-on-year. Recently acquired Badshah Masala, according to the update, is expected to register growth over 10%. International business may report double-digit growth in constant currency terms, and India business too may post growth in high single-digit. Good performance by healthcare and home care. Overall revenue growth seen in high single-digit. Gross margins are expected to expand, but will be reinvested in ad spends, EBITDA, to grow in line with revenue. Also, PAT could be higher on account of PAT could be impacted by higher amortization. A bit about Reliance Industries. We were talking about it. JP Morgan has come up with a report. Overweight rating, target price of 2,960 rupees. It says JFS demerger approval from NCLT comes through. Expects detail at AGM. Currently ascribe only treasury stake of RIL that JFS would own at the value. That's the word coming in. Overall, for Reliance Industry, overweight rating there. The stock has been doing well. Multi-month high levels. Nifty 50. Well, we're seeing finally Indian equity markets, let's just say the benchmark index tailing the global cues. Down and out with losses of around 0.25% out there. Let's talk about a Bank Nifty also, along with the small cap index. Bank Nifty, that's also the one which is contributing to the losses, amplifying the losses for the markets, perhaps. close to 0.5% of losses coming in for Bank Nifty overall. Let's address the small cap and the mid cap index overall. Mid cap too has succumbed to some amount of selling pressure, and small cap at this point of time is acting no different. Well, a bit of difference there. It's a flat start with a negative bias. So in the markets like this, also the small cap index seems to be, outperforming in waves. IT down and out with losses of around more than 0.5% out there. And in terms of other sectoral indices that we have, metal index has been doing well. Beg your pardon, it's also witnessed some amount of profit booking coming in on that. FMCG has been holding in green. And in terms of other sectoral indices that we have on the chart, pharma too has been, it succumbed to selling pressure. In line with the IT index, and consumption story is no different. Overall, let's look at the real estate realty index just to see the trend is any different. Auto, well, no difference out there, just playing up to the tune. But realty index is the one which needs to be watched out for, bucking the trend up with gains of around 0.4%. Advance and declines at this point of time: 14 advances, 35 declines. Market breadth is in the favor of declines clearly, which has also been probably sensed across the kind of sectoral indices, barring real estate. I guess most of them are down and out and have given up to some amount of selling pressure. Let's talk about the top gainers and top losers that we have on the list right now. Titan, well, wonderful update there. We did given the updates to you ahead of the opening of the stock. It's a strong opening for Titan, UPL and Nestle India. These are the top gainers. Reliance, we discussed enough and more about it in detail. Eicher Motors and, more of something like a Tata Consumer Products and L&T. These are some of the top gainers that we have on the list right now. Let's talk about top losers. TVS Lab, Praseem, ICICI Bank, along with Hindalco, Bajaj Auto and IndusInd Bank. Essentially, these are the top losers that we have on the list. So clearly, we are seeing some amount of outperformance coming in from Titan. For nearly two years, the question was whether Titan's premium valuation could sustain. And with this Q1 updates remains to be seen. Titan is still riding the wave, by the way. A robust, a strong business update for Q1 is helping. But June quarter, if you look at the traditional sense, has been a strong one because of the wedding seasons around for Titan. So that's the one top at the top of the bandwagon coming for Indian equity markets. But Chair, I'm going to come back to you and check with you. How are you reading into Titan technical charts? Do you think it's a investment opportunity, or the market participants can be looking at these levels?
See, overall, I would say that definitely, Titan has broken out from his long-term consolidating range above the levels of 2,800, and now it's around the levels of 3,200. So, if at all there is any dip, should be definitely used as a buying opportunity till 2,800 levels on the lower side ahead from an investment point of view.
Sure. Jay, we're just going to leave it at that. Thank you so much for taking out the time and speaking to us this morning. It was indeed a pleasure having you with us.
Thank you.
All right. We're also going to be technically addressing in the fundamental side of the story. And joining us to take the discussion forward is Amit Jeswani, founder of Stallion Asset. Good morning, Amit. How are you doing? It's been a while that we've chatted. Markets have been hitting record high for the last 6 consecutive sessions. A bit of profit booking probably entering in, tailing the global markets. I'm sure you've read the news flow around the small cap index, where funds like Tata and Nippon, they've stopped accepting the lump sum investment coming into these funds, probably indicating more of overplay in small cap index. In today's session, small cap index probably is, trading flat. What's your view? You think there's more steam to the rally? And if yes, what are your picks within the index?
Good morning, Nickey. Good morning, everyone. And thank you so much for having me on your show. So, Nickey, we are bullish on the markets. The markets have made a new high. You don't fight the markets. The primary trend is, of course, very bullish. in the market. Of course, the 10-year bond yield yesterday has moved above 4%. There's a 90% plus probability now that the Fed will hike interest rates by 25 bips in this meeting. So that there may be small 4, 5, 3, 4% type of corrections, but this is time, Nickey. This, according to me, this is time to think big and make it large. Bull markets are about changing net worths. It's not about playing 100, 200 points on Nifty. It's about how can you make it very, very, very large. And if you don't change your net worth in a bull market, you have got it wrong. If I don't change my net worth, I have got it wrong. If my customers don't change their net worth, they've chosen the wrong portfolio manager. Bull market's about how much can you make. And the next 1 year, according to me, things should be very good unless some unknown happens. The things we've gone through an 18-month kind of correction, and we've just breaking out of that 18-20-month correction. Typically, after a 20-month period, whenever the market makes new highs, FIs have sold 4.5 lakh crores till March. They've bought 60,000, 70,000 crores now. There's a long wait for this cycle to go. Of course, there'll be short-term corrections. I can't time all that. I don't even waste my time doing all that. But the longer-term trend, the medium-term trend is very positive, and you want to make it large. What are we buying? We're chasing growth, and that is what we do all the time. And see these quarterly updates, these results updates which are coming, where HDFC Bank is growing at, let's say, 15%. This is not a recommendation. Me, my family might have vested interest. My people, my clients, everyone. So all disclosures there. These are not recommendations, but I'm just telling you how we think about it. If HDFC's bank is growing at 15%, we're not very happy, and we cut the salary of or our weights in our portfolio of HDFC Bank, and probably a Bajaj Finance, which has grown at 32% this quarter, looks like will grow at 34-35% next quarter. That is where we add more weights, because we cut salaries where the employee is not performing well, and we give bonuses if the employee is doing well. And that is what we do every quarter. So that is what we've been doing, Nickey. It's a start of a quarter. We're starting afresh, and we will chase growth.
All right, chasing growth. And within, you spoke about large caps, essentially. You spoke about HDFC Bank and Bajaj Finance. But clearly, the whole party lies in the broader space. Talk about mid cap, talk about something like a small cap. Even stocks like Suzlon Energy have started doing well. Inox Wind have been doing well. What's your assessment overall?
See, there was an analyst meet 2 days back about Inox Wind, and Inox Wind says that revenues for Inox this year was 700-800 crores. And the expectation is that revenues will move from 700-800 crores to 4,000 crores. That is what the management, Jane, has said on the analyst meet in FY24. And if this happens, whatever he's guided, if this happens, you're seeing a multi-bagger in the making. So this will not go up one time. This will go up multiple times. If you believe in Jane, basically the promoter family of Inox, because they've delivered well. So their history is that they have delivered well on their promises in both Inox, which they sold to PVR, and in GFL, which is Gujarat Fluorochem. So both these businesses, they have delivered well. If you believe in this thing. So in the last 5 years, wind energy has been going through the most horrible cycle. And I'm surprised. And most out of 20 players, 15 are already bankrupt. Now there are 5 players left. 3 foreign players, Suzlon and Inox Wind. These are the players which are left in the wind energy space. And they have very strong order book. How many businesses do you think can move from 700 crore revenues to 4,000-5,000 crore revenues in 1 year? So we do not have positions here, but we are evaluating it aggressively. That what are the odds of? See, these are moonshots, and you can't allocate large sums of capital in these kind of bets, Nickey. But you allocate some capital if things are going to. If it's going right, then you keep increasing your way up. And if they're not going right, then you cut your losers. Because if you get it right, you make multiple times. But if you get it wrong, you don't lose a lot of money. That is very, very, very important when you're betting on these moonshots.
Right. That's the approach also that Amit has suggested. Let's also talk about IdeaForge, where, it's a new kid on the block which is going to be listed. 100% kind of subscription, probably the record highs that we've seen for a drone maker company. What's your assessment on that? And within the IPO space, so for example, even Senco Gold, that's mustered in quite some interest from the investors. What's the hottest pick for you within the primary markets?
So I don't track IdeaForge so well, so I won't be able to comment. But Senco, the valuations are very attractive at 13, 14 times. The pricing is attractive. So I don't know if I'm going to hold that business for a long period of time or no, but in my humble opinion, I can be wrong, of course, you should get a very large listing gain. The pricing of the IPO is very, very, very reasonable. The business is mediocre at best, but it's a localized play focused on West Bengal. But it's a decent business, and you're getting it. It's a decent business and very reasonable valuations. Because see, Kalyan also, when it came at 25 P, but now Kalyan's moved to 35 P plus. So here, if the business gets it right, you'll make a lot of money. If the business doesn't get it wrong, you still don't lose a lot of money. So those are the kind of bets. See, these are mediocre kind of businesses. These are not, you can't compare a Senco to a Titan. Like Titan is at 80p, but there's a reason why it's at 80p, because it's consistently grown. It's a market leader, consistently grown, and this quarter was also decent. Like Titan also, we might have vested interest here, but Titan numbers till 8:30 in the morning looked very good till the time Kalyan Jewellers numbers came. Like Titan grew at 21% this quarter, and I was very happy till 8:30 in the morning today when I saw Kalyan Jewellers growing at 30% plus this quarter. But regardless, Titan is a very decent business. Those are longer term businesses, but Senco can be a decent bet for investors. The valuations are very attractive. And in a bull market, even mediocre businesses get very decent valuations. So you don't have to worry too much.
Since you have spoken about Titan, the question was whether Titan's premium valuations could sustain and are justified at this point of time or no. The fundamentals remains good for this company, like you just suggested. There are institutional investors which have parked their money within this industry leader. But you just compared Kalyan Jewellers with that of Titan and probably gave out a growth comparison between the two, at least for Q1. But let's talk about valuation. What do you think about it?
So see, Titan, like this is has moved from 20. Titan's revenue in FY 2020 was 20,000 crores. And by 2023, in a 3-year period, which was hit by COVID, they doubled the revenue and the revenues were at 40,000 crores. This year, it is expected. So it doubled revenue in COVID period. If you fundamentally compare it to any other retailer, like DMart, the growth of revenue was 72%. Okay, it was FMCG, yet growth of revenue. You compare it to most apparel retailers except Trent. Trent has grown at 120% pre-COVID to FY23. See, and that is why Trent and Titan in the retail category are way above most other players. We have vested interest in both of them. I'm just saying it. You are chasing growth with a large terminal value. You need great businesses, but they need to also grow very fast. Like DMart's growth, I'm just speaking retail in general. DMart's growth was below 20%, was at 18-19%. DMart is not, you don't pay 100p for 19% growth. Coming back, Titan is not cheap anymore. It was cheap when it was down 30% probably from here at 2,300 rupees. Right now, it's not cheap. Titan is trading at 65 times FY24 right now. The range of Titan, see, all stocks move in a range. Like Nestle moves in 70p to 90p. All these stocks, all these consumer stocks, like DMart moves from 90p to 110p typically. Titan also moves at from 1 year forward term from 55p to 70p. That is the range of Titan. 1 year forward for Titan. So you're right now at 65 times FY24. You're on the higher side of the valuation curve for Titan.
Higher valuation clearly, but if you talk about the stock gains, 2.5% uptake coming in for Titan and Kalyan Jewellers too. Like Amit indicated, the growth started looking better off for Kalyan Jewellers, 4.5% gains coming in for Kalyan Jewellers with the Q1 update out there. Let's talk about auto. Maruti Suzuki hits the 10,000 mark, homecoming for the stock after 6 years. 2017 was when we saw Maruti Suzuki trading around those levels. There have been a couple of rejig in the strategy. They're focusing more on UE. There are a couple of launches also. How are you looking overall at the auto basket and the valuations? And within that, what's your pick?
So, Nickey, we like to use a play in the auto ancillary space rather than going for the OEM players, at least for now, because see, there is competition and coming very aggressively. If iSure was doing decently well and doing 30% margins, you had Harley Davidson, and so it's a red ocean out there. I believe like companies, these are not recommendations, but companies like Minda, they're moving by kit sets. And example, they used to sell only lighting. They have started selling sound, like acoustics. They're selling switches. So they're selling many other things, many other components in the vehicle. So they are increasing their ticket value per car or per two-wheeler. That this kit is 40,000. Don't just buy my my mirrors or my see, there are some guys who are selling mirrors, some guys who are doing forging. If you can sell it as a kit, the entire basket, that's the kind of business that will make it very, very, very large. And you want to bet on auto ancillaries because OEM space right now, like this is what I think is red hot competitive. There are no new players entering and there is also a threat of EV. So who's going to make it large in the next 3-4 years as the pivot happens from ICE to EV? I don't know. These are very early stages. I know someone will make it very, very, very large. It's going to be dominated by software. See what has happened in the US markets, the way Tesla is doing. I get very scared. Like Tesla is now selling 4.6 lakh cars a quarter, and that boom sometime will come in India. So out of 1.6 crore two-wheelers that were sold in India, 1.6 crore two-wheelers that were sold in India, 7 lakh was EVs. That is, you're looking at a small percentage, like a 5% kinds. Now, this will move to 100% for sure in the next 3-4 years. And you want to see players there. Even on the two-wheeler side, that game is going to change. In the four-wheeler side, the game, not in 2 years, probably in 4 or 5 years, that game will also change. And you want to find the newer winners there, or the same winners, same companies make it large. So very early days, and there is disruption which is coming in this sector. That is for sure. You don't know who's going to be the future winner. So when we are very confused on the 5-year period, we don't play it for 6 months also, or 1 year also.
But Amit, within the US market also, I was listening to that interview for Elon Musk where he suggested that, it's just Ford and Tesla right now within the US market which have been profitable. The struggle is real for the auto industry market and the US market. How comparable are the two industries here? I mean, Indian automakers is compared to the US market. That's one. And B, are you just saying that the companies which are focusing on EV probably would be the one that would be leading the whole rally out there for the basket?
So I'm saying let's not focus on the auto OEMs at all. I'm saying let's focus on the auto ancillary part, because the auto ancillary players are the lowest cost guys. See, there are some things which are too tough to analyze. And the good part about us, Nickey, is that we have to own only 20-25 stocks in our portfolio. And we select the highest conviction 20-25 names in the portfolio. Right now, we are more convinced on the auto ancillary space because there the growth. So if you look at even Minda, the revenues have doubled in the last 3.5-4 years. Except TVS Motors, no other the auto company has been able to manage that kind of growth. So be it Minda, be it, we don't have Sona Comstar, but that is also, these are the two players, I would say they have high growth, high ROIC, market leadership, and a very large opportunity in front of them in the auto ancillary space. And then there are smaller players like Pricol, which are market leaders in the DIS systems. DIS is where the largest change is happening. There are only two players in DIS, Minda Corp and Pricol. Pricol, of course, there's a fight going on, but DIS is where your driver information system, you see any car, you would buy a car not just based on design anymore, it's design plus that driver information system. And this is where it will work like a software as a service. We are also evaluating recommendations, companies like Map My India. While we're not very big So that companies on their investor meet, they are speaking about 40% growth. That out of 20 crore cars which are there in the roads, they have about penetration in 19 lakh cars, and Google cannot be inbuilt in cars. So every time you buy a MG Hector or any car, Map My India makes money, and your costs remain the same because there is no incremental cost. So if you sell to 100 people or you sell to 1,000 people, your cost is going to be the same. So there are benefits of scale. So we are looking everywhere but we are more focused on the auto ancillary part, Nickey, not on the OEM part. That is where we think there is too much disruption coming. And let's see who wins. What's the hurry?
Interesting conversation, Amit. I'm just going to leave it at that. And thank you for taking out the time for, this interesting conversation around the corner.
Thank you, Nickey.
All right, pleasure. Well, with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us in the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.